Hi, and welcome to another product knowledge video. This one's about insurance for technology companies. Companies, now that's a unique way of approaching it. Well, you'll see. Bob Sargent is a tenant risk services general agent, wholesaler, and so forth. He is the past president of an organization called NAPSLO, which is really, as far as the insurance business has gone, is one of the most professional and major organizations about surplus lines in the world. Anyhow, Bob is also a general agent, a wholesaler. He specializes, he's an underwriting manager. He specializes in professional liability, errors and omissions, cyber risks, and so forth. And technology is one of his majors. And what we do is get the top people we can in the country, as we have this time, and let them tell about the coverages. And then you deal, of course, from the agency. So I guess the first thing to do, Bob, if you will, is explain what kind of companies are we talking about in technology.
Well, thank you, George. Pleased to be here. And as everybody knows, technology is sort of everywhere. But from an insurance standpoint, we try to figure out what the technology company is doing and sort of put it in two different categories or buckets. The first is developers of technology, which is pretty straightforward. These are organizations that are developing software and other forms of technology for other people. And obviously someone like a software developer or website developer would be examples and would have exposure to errors in their software, something that might not meet client expectations and cause problems and could lead to a claim. And of course there's exposure from cyber risks as well for, say, breach of client data, that kind of thing, and they typically need E&O and cyber risk, errors, omissions, and cyber risk as well. And then, of course, there's this second category. We just call it users of technology. And these are organizations that are really technology-enabled companies. They have maybe some unique business models or more traditional business models, but they rely on technology to provide their services a little bit differently. And, of course, they can be simple or complex and sometimes even involve hardware or products as well as services. And the example, I think, that becomes obvious to everybody is these ride-sharing companies like Uber or Lyft, where the entire company is based on technology, but in effect it is sharing rides, essentially ride-sharing. And their exposures really run all across the insurance spectrum, everything from software exposures and cyber exposures to auto and auto liability, direct and indirect, and general liability. And then, of course, you've got the other coverages which are important to many technology companies, such as directors and officers, employment practices, and sometimes even property. So the users really run the gamut.
I was just going to ask you what kind of technology companies, what kind of insurance they need, because this is relatively new in our world. But go ahead.
It is. It's actually fascinating. And so, you know, I think the primary exposure that everybody thinks about is errors and omissions, also called professional liability or E&O, and that would cover claims for errors or omissions from the provision of a service, in this case a technology service. And as we mentioned before, you know, it might be a software developer who has a claim or a lawsuit because the software didn't work as intended, and then there's the cyber exposure as well. And if it's a you know, a small sort of organization, might have 1, 2, 3 employees, and maybe not even an office, and they're developing software, you know, they might not really have any GL or very limited general liability or premises liability, but their technology, E&O, and their cyber risk are the drivers. And maybe mention a little bit about the cyber risk as well, because this is not always top of list when talking about technology companies, but it's pretty important. And of course, cyber risk insurance is really protection from disclosure of confidential information, usually through some sort of a breach. But also comprehensive cyber covers a whole range of other exposures, including damage or even destruction of systems and data from criminal activity like hacking. It can include theft of money through hacking. It can include this new category called social engineering fraud, where criminals use deception to cause the funds to go to unintended criminal recipients.
How about ransomware? Is that in there?
Ransomware is definitely typically covered, and it's interesting you mentioned that because everybody thinks of ransomware, the outcome being the extortion payment that needs to be made to get your data unlocked. But what people are finding recently is that the losses from ransomware really are more of a business interruption loss, where an organization is shut down, they can't operate, they run up expenses, they need additional expenses to get back working, and in many cases the business interruption losses from a ransomware attack are way, way bigger than.
Oh yeah, absolutely. I can see that. Yeah. All right. Well, let me ask about classes. You always talk about classes of various coverages. What are the classes of technology-related businesses?
Well, certainly the technology services, which would be primarily the developers, software developers, online systems, network management companies, those kinds of things. Mm-hmm. But really, when you start thinking about other types of businesses, particularly professional services, there are many new technology-enabled companies that are really changing how things are delivered. And these all have really fascinating and sort of different insurance coverage needs. So, healthcare, for example, would be one where you've got some fairly sophisticated systems. Well, you've got system development and consultants, but then you go beyond that where you're starting to see these medical systems that may, for example, measure certain patient vitals and then take that information and run it through some sort of analysis program, some sort of computer program, and then provide not only the patient information, but an analysis of the patient information to a physician. And so these kinds of technology systems in healthcare actually are fairly complex because they're not only sort of technology, and cyber risk, but they may have some sort of a healthcare component and a medical products liability component as well. So it's a fascinating area. And then, of course, you've got things like life sciences, clean technology and energy, and actually a fascinating one that is maybe two that are coming up. One is financial transactions, and of course, what's known as fintech or financial technology companies are an incredibly hot area today. But the exposure is actually fairly significant because you're dealing with some sort of service that involves typically some payment or movement of money, and the insurance needs there can be fairly complex. And of course, there's a lot of conversation about drones, and so people talk about drone insurance, and sure, that's one component, but we're actually seeing drones be used in other professional services. For example, you could have some sort of a land surveyor or an inspector who all of a sudden is now able to very efficiently see a property from an angle that is either not accessible at all except maybe by helicopter or is difficult to get to on foot. And so they're being embedded in these types of real estate professional in that case, and of course real estate agents are using drones for photography quite a lot, and it obviously means there's some additional exposure there.
Well, now there's some key points, like in every other coverages. I always know you always mention takeaways or difficult to get insurance. I guess the key points, takeaways. That's interesting to me. What do you mean by takeaways?
Well, it's sort of we're talking about a complex area, and so what are the key points that someone should keep in mind as they're going about reviewing insurance for technology organizations. So I think what's really important are maybe 3 points. One, as we've talked about, the services vary quite a bit, and the exposures therefore vary as well. So there's actually not across the whole technology spectrum, there is not sort of one consistent exposure or service. They're varied, and it's important to understand that, because that means that the coverage needs vary. So the technology, the insurance for one technology organization might be very different than the needs of another, and of course that means that then the agent or broker and the client need to make sure they're being very thorough in the placement process to make sure they're getting the coverage they actually need.
Boy, there's a lot of, this is pretty complex, isn't it? Much more than I had thought. Well, you mentioned that you had developers of technology and then you had users. What's the difference? What are the needs about developers?
Well, as we talked about, developers are the organizations that are developing various aspects of technology for use by others. Sort of a simple example is a software developer that might be, developing a specific kind of software or maintaining a type of software for an organization. But there's things that are much more complex than that. And so in healthcare now, you're getting these systems that can develop genetic information for patients that could be used in drug therapies.
Right.
We worked on an account that had developed a system for parking lot management, which sounds not all that sort of sexy, but you're talking about something from a system standpoint that is complex, because you've got some hardware, you have automobiles and people, you've got payment processing, and all this stuff needs to function 24/7 without interruption, or otherwise people can't get the cars out or in. So, you have actually quite a few very sophisticated technology systems these days that people are developing.
All right. What about users?
And users is maybe even more complex. As we talked about, you've got service organizations with different models, and I know people in the technology business talk about B2C, business to consumer, and things like phone applications that might provide a number of different functions. Open Table is a good example, where you're providing a bunch of information, but exposure is not maybe as complex as some other areas. And then, of course, in the B2B or business-to-business segment, you've got all sorts of professional services that are technology-enabled, as we've talked about in healthcare and financial, but legal services, construction, that kind of thing. So a lot of complexity to this. And as a couple of examples, we have talked to or worked with people that are handling, say, insurance transactions in the fintech world, where it's not just a system, but the system is taken to the next step, so they're almost outsourcing some of the backroom functions. And therefore, the errors and omissions needs for that are, just in the errors and omissions segment, are more complex than just technology E&O. They need something that goes beyond that, because they're actually in part of an insurance transaction. And we've seen this actually in the investment world as well. So, for example, a company that developed a system for investment managers to run their operations, this company went the next step and was outsourcing some of their back room. And so that creates exposures, and it creates insurance needs for, obviously, E&O, and not just technology E&O, but investment E&O as well, and cyber risk. And in fact, this company actually had a pretty bad social engineering fraud claim.
Ooh. So let's talk about E&O, because that's really vital, and more and more so all the time, it seems to me.
Well, yeah, and E&O is probably at the core of most of the coverage needs. Errors and omissions insurance or professional liability insurance for technology companies is a claims-made form. It's primarily a technology exposure, so the scope of services are written with technology, but it could be, as we've talked about, professional services as well. We worked on an engineering consultant, for example, that went the next step, and they were developing systems for factory floor automation. And so you've got not just a technology E&O exposure, but you've got more complex E&O exposures as well. And so that policy needs to be customized a little bit.
When you talk about, excuse me, I didn't mean to interrupt you, but the cyber, this all kind of comes together, doesn't it? Here's the C&O and the cyber. I didn't mean to interrupt your train of thought there, but
yeah, no, that's fine. And cyber risk, as I said at the beginning, is sometimes forgotten with respect to technology companies, but it's an incredibly important coverage and exposure. And I think one of the challenges today is that when people think about cyber risk insurance, they think about data breach, and that is an exposure. But it's not just about data breach. You've mentioned ransomware, which has gotten a lot of attention recently. Mm-hmm. That's an operational exposure. We talked about business interruption, and then there's the sort of crime component, the loss of money and social engineering fraud. And then, of course, with technology developers, there's a big liability component with cyber risk as well. So, cyber risk is important, and cyber risk in technology is delivered to the client, to the insured, in two ways. One, it is as an add-on coverage to technology E&O policies, and a few carriers do this really well. And then in other cases, it's written on a standalone or separate policy basis, and either way, as long as it's comprehensive and customized for the client, either way is fine.
Mm-hmm. Got it. All right. Are there other coverages?
Sure. I think with technology companies, certainly directors and officers, or D&O, and employment practices liability insurance, or EPLI, are important coverages. And particularly for technology companies, you get some pretty interesting, for me, interesting exposure challenges. A lot of technology companies are either early stage or startups. They may have financing from third parties, angel investors, venture capital financing, and then as they get more mature, they may have more permanent owners. But this requires D&O coverage in particular that has appropriate coverage for shareholder suits, and of course there's exposure from clients and vendors as well. And equally important as a technology company grows to have employees is having the employment practices liability coverage. And again, many technology companies are fast growing. They are hiring quickly. They may have turnover. They may have managers with less experience in their particular positions because of the speed in hiring, and that can bring exposure and require the appropriate employment practices liability coverage as well. Mm-hmm. And then GL and sometimes products coverages fit in as well. And as we mentioned with the ride sharing, you get coverages like auto as in addition. So there's these other coverages that go with technology companies beyond just the E&O and the cyber risk insurance.
Like burning batteries, huh? We've heard that song before.
We have.
Yeah.
Exactly.
All right, let's talk about the harder to place ones, the ones that are tough.
Well, sure, and some of these are just unique, and some of these are harder to place. But we've talked about startups a little bit. Many companies in the technology segment are newer, early-stage companies, and they have their own issues. We have generally conversations with them about making sure that we're appropriately estimating revenue, which is one of the exposure bases, making sure we have appropriate limits, making sure that D&O coverage is in place for outside investors and outside directors if they're starting to participate, and making sure that gets done at the right time. So startups is not necessarily hard to place, but it's certainly
more difficult.
A little bit of a different thing. Platforms is interesting. I mean, in technology, platforms are one important segment. We've seen some really interesting ones, including in the legal world, where they're providing networking opportunities, content opportunities, and they would have obviously technology and in this case legal and maybe some media and cyber as well. So platforms generally have information and interaction from third parties, and so there's a liability component there that's pretty important.
I can see why it would be. Combo. What's a combo?
Well, we've talked about a little bit without the terminology, I guess, but these are technology companies that have a technology E&O exposure, and they also have a whatever the class is exposure. So I mentioned the insurance agent, insurance technology platform, and the investment sort of outsourcing and systems operation as well. And those would be examples of situations where the client needs both a technology E&O coverage and whatever the service E&O is, so say investment E&O. And so that requires someone like us to make sure we can get an underwriter who's willing to write both and get that customized so that we can deliver both of those coverages in an efficient way.
Yeah, I can see that. Sharing economy. What's that?
Well, this is fascinating. There isn't one good definition of the sharing economy, but generally people are talking about technology-enabled services where there is basically a connection or access component between someone who wants the service and someone who's providing the service. So certainly an example would be Airbnb or Uber or VRBO, and these bring some pretty interesting insurance challenges and opportunities. So certainly there's a technology component to this. But for example, if you're talking about someone like VRBO, which is vacation rental by owner, there's also some property exposures and liability exposures as well. So the owner of a property who's putting it out on this platform could say, someone went into my home or my property and did damage to it. And of course, you get the reverse, where someone is going to rent an apartment or a home or whatever it is for vacation, and they find that certainly there's problems that they didn't anticipate. So it cuts both ways, and this creates insurance
I can see the problems
for everybody.
Right. Security.
Security is on everybody's minds today. We had a very interesting technology company that was providing a communication mechanism through technology for active shooter situations. So it was a method where one person in the organization, through both hardware and connected technology through phone apps and things like that, could alert everybody to what was happening in a particular location and what they needed to do. And obviously from a insurance standpoint, not only is there a technology exposure, but there's a big general liability exposure as well.
Wow. This never ends, does it? And then financial. You mentioned that before a little bit.
Yeah, and we've talked about that. I mean, we've talked about, for example, that investment operation and some of the insurance stuff. I mean, we've worked on loyalty systems where a technology company develops a almost like a frequent flyer program for retail shops and or malls or something like that. And of course, there's all different components to that. So that creates not only a technology, but there's a financial exposure as well.
All right, and then the final one, and that is probably apparent to everybody, claims. I guess if I've had a number of claims, I'm going to be hard to insure. Is that what you're saying?
Exactly. So, adverse claim experience is always pushes an account into the harder than normal to place category, and it really depends on what the situation is. So we work with a client to try to figure out what happened and why, and explain that to an underwriter, and having some explanation for what are the mitigation steps that have been taken is important and helpful. But we work through that, and there are always underwriters who are very interested in writing those kinds of situations if they can get a good understanding of what happened.
They like the challenge, don't they? It's always fun.
Challenge. That's right. That's right.
All right. Let's end here by asking you, how do you get insurance coverage for technology organizations? Easy question.
Well, of course, it's an easy question. The answer is always a little more complicated.
Of course.
Typically, the process works with, as with all specialty insurance accounts. There's some sort of an application that gives information to an underwriter to be able to assess the risk. With technologies we talked about earlier, it can be more complex. So really a starting point is to make sure that we have a pretty clear idea of what we're dealing with. What does the company do? And even before the application process, because we want to make sure that the client is completing the right applications and that we're communicating the right information.
I can imagine that's vital. Well, here's the key points you kind of talked about here, I think. You can end it. Yeah. Business model.
Sure. Well, as we've talked about, the technology business models are very varied, and the exposures are varied as well. So, as we've talked over the last few minutes, insurance needs are not easy to define without a little work. So they vary, and my recommendation always is to use an expert. That will make the process a whole lot easier.
Well, I think I think so too, Bobby. I mean, what I think I've learned from you during this period of time is the complexity of this thing is much more complex, is that the word, than a lot of exposures that we see, that we've been looking at coverages. It's just, I guess it's because it's so changeable. Everything's going crazy in this business, I believe. I don't know if that's the way I put it.
And it is, and changing fast from day to day.
Yeah, so we better know it. Well, the words are to use an expert, and as Bob is, as you heard him talk, you understand that he is. And so what you should do, you listeners, is to go back and click on Connect with me, and that'll take you right back to the agency. In the agency, you'll talk to Bob, one of his counterparts or something, and get this technical help now while it's needed. And Robert, again, I thank you for your continued help to tell people what these insurance coverages are all about, to enlighten us so that we can make better decisions.